Welcome to the Treasury Update podcast presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in. On this episode of the podcast, host Craig Jeffery joins Muriel Dewingaerden, Product Manager in KYC Compliance Services at Swift, to discuss Know Your Customer for corporates. Topics of discussion center around the evolution of KYC, the challenges corporates are facing today, KYC solutions and tools, streamlining compliance, and more. Listen into the discussion to find out more.
Muriel, welcome to the podcast.
Thank you, Craig, for having me today.
Yeah, I'm very interested in talking a little bit further with you about Know Your Customer for corporates, and maybe it would be helpful for the audiences if you just explain your role, a little bit about your background at Swift, or whatever would be useful.
Sure. So my name is Muriel Dewingaerden. I'm based in Belgium, Brussels, and I've been working at Swift for 20 years now. For 6 years, I've been product manager of the KYC registry. So I basically saw the launch of it, and I've been observing the evolution of it, the adoption, how the community is increasingly using it. So this is my background for the last 6 years.
It is good to be talking to the brain trust and the action trust on KYC. So, Muriel, maybe you could start with, just describe what's going on with KYC, and what does Know Your Customer accomplish, and maybe we can get into the registry in a moment. But what's happening with Know Your Customer?
Yeah, sure. So it's a great question to introduce the topic indeed. So KYC stands for Know Your Customer. It's actually a process which is imposed by regulators onto financial institutions, whereby banks need to demonstrate a risk-averse behavior when doing business with any client. So the ultimate objective is to fight financial crime. And so when we talk about risks, we mainly refer to crimes like money laundering, bribery, corruption, or terrorism financing. So the intention is to surveil potential involvement of financial institutions in these criminal activities, consciously or not. As a bank, your activities may be clean, but by doing business with a dodgy counterparty or country, you may not realize that you are participating indirectly to those crimes. So in a nutshell, financial institutions are due to perform the KYC due diligence on their clients and ultimately report back to regulators. So in a way, it's a three parties deal, if you wish. So if you zoom on how banks are organized, they will typically run an onboarding process when starting a new relationship with a client, including basic due diligence checks, I would say. And based on this, they will assign a risk score to their client, which will be regularly reviewed all along the relationship. So depending on the changes in the client's data, the risk score may increase. The periodic reviews will be more demanding, and then we talk about enhanced due diligence, but also the checks are performed at a bigger frequency. So KYC is only a piece of a client's risk monitoring and is then complemented by other processes like, for example, transaction monitoring, bad press checks, and so on. But today, of course, we want to focus on the KYC part. And coming back on the three parties' interest, maybe, you can see that for financial institutions, a solid KYC process is key because not addressing the regulations properly can lead to breaches and ultimately to significant fines. So if you now look at corporations, the consequences of not helping the banks in this matter is a risk of banks starting something which we call de-risking, which means simply that they will be terminating the business relationship with their clients, which is not a positive outcome for business, right? So that is, in a nutshell, a smart refresher on what is KYC.
There's a bit of overhead that comes with this. Sometimes it's, like you said, it's basic, and then there's enhanced due diligence. many corporations who participate in that identify KYC as one of their top pain points. Everything around security creates, certain types of, I don't know if you want to call it inefficiencies, but extra work. And this is a top pain point identified by those by organizations, treasury professionals. So why are you seeing KYC being such a challenge for many corporations? And I know we'll get to the answer soon, but what are some of the areas that you see as the biggest challenges?
Mm-hmm. No, yeah, you're right, Craig, to mention this. And as you mentioned, nobody today will put this challenge into question, because we clearly see an eagerness from corporates and banks actually to find the miracle solution that would mitigate the challenges. So this eagerness we see is a sign that the challenge is not going away, as you mentioned. Now, what is the challenge exactly? Well, you see, big corporations often have a business relationship with multiple banks across the world. And as I mentioned earlier, banks have no choice but perform solid KYC checks on their clients. And as a matter of fact, it percolates on their clients and corporates with more and more information to provide. Of course, it's in their interest in order to maintain the business relationship. But these KYC checks vary from country to country, as regulations are not harmonized across the globe and there's no standard as such. Some of the checks are pretty much standard to all jurisdictions and obvious for a standard due diligence. I'm thinking, for example, a piece of info like a business license, for instance. This is typically accepted by everybody that it will have to be provided. But other checks are very country specific and can go in a deep level of detail. So when being approached by their financial institutions, a corporation never knows to which level of details they will be interrogated, and they could be caught by surprise by the depth in which they have to respond. So I would say that based on this, the issue for corporations is maybe twofold. For the commonly asked information and documents to provide, a multi-bank corporate will have to repeatedly share the same set of basic documents in a bilateral way with every single counterparty, which, as you can imagine, leads to inefficiency, as nobody wants to perform the same task over and over again, right? Okay, and then you have an additional set of data and documents to provide, which is very variable depending on the local regulatory requirements. For this part, the challenge is to adapt to every single relationship, understand what exactly is required, collect the information internally, which is not always at hand, to be able to satisfy the bank. And on the field, this leads to many back and forth between the corporation and its bank, all the frustrations that go along with it, as you can imagine, and it can sometimes to months before the financial institution is satisfied. So in short, the time-consuming bilateral exchanges and the lack of standardization are the main challenges, leading to high costs for the corporation and potentially slower business growth as well.
Yeah, and maybe some excess stomach acid as well. If we're to be honest, just this back and forth can be a challenge for people. But Muriel, Swift has been working, as you described in your intro, on the KYC registry. So maybe you could talk about some of the solutions that reduce the challenges either on the commonly asked for documents or information, as well as on cutting through the complexity of variable requirements on a jurisdiction by jurisdiction basis. What are some of the solutions that can help?
Yeah, so based on the costly process I was just mentioning, it's more and more obvious that institutions they want to avoid to dedicate costly human resources to activities which in the end are only a cost center. We have to realize this, and not developing any business. But over the years, and with the regulatory requirements increasing, most institutions saw their teams growing to cope with this complexity and started to look for a replacement of these bilateral exchanges. The first trend was to turn to central utilities, I would say, which certainly proved and still proves benefits. The feedback we hear on utilities is that they have their limitations in the data they can provide. So they're good at performing the data research, aggregation of that data and cleansing, so that the institutions have a lighter data collection effort to provide and can focus on the risk rating. But however, it seems they're limited to publicly available information and will only occasionally include some of the private data. So in this case, financial institutions still have to request the private data in a bilateral way. It can be handy for a common due diligence, so a CDD, but not enough for an enhanced due diligence check, in which case you need to obtain more deep information, especially for a high-risk clients. Then lately, a peak in automation attempts as well. Big organizations have invested in quite sophisticated software to automate their KYC process. But of course, it always comes with a cost, right? At the data collection step, automation will typically include technologies like web crawling, machine learning, which are quite hype for the moment, and help, again, collecting the basic data in various sources. It helps, there's no doubt about that. You can select what you would call as a trustable source in the eyes of your organization. But again, it's difficult to reach the private data, which usually sits at the institution side. And to teach or configure these technologies, teach your machine to your own needs, can represent a high maintenance effort as well. So actually, I'd say in terms of solutions, that the key elements that have to be part of any of those solutions are, say, number one, the number of data points you can retrieve based on your KYC policy requirements, which often includes the private data, by the way. Number two, the reliability of the information, as it has to come from a recognized official source. For these 2 points, I would say that a standard is what everyone is looking for, and that will solve or address these two points. So number of data points and documents, and reliability of the information. And then number three, what you should have in the solution is the security of the data, which is being exchanged between the parties as well. As I said earlier, some checks are so deep that you're often asked to provide confidential data about your organization, and you want to have control on who can access it. The SWIFT KYC registry is also one of the solutions which emerged a few years ago. As you know, SWIFT is a cooperative of banks, and traditionally they will turn to us when they need a federated standardized solution. So a few years ago, they knocked on our door to build this central platform jointly. The first thing we tackled was to establish a standard. No doubt it was really the first need, and a standard which would be acceptable by a majority. Then we built the platform addressing the key needs, namely data sourcing, liability, and security. It was primarily to help banks perform their KYC on each other. And after being live for 5 years and the solution working well for financial institutions, we have decided a year and a half ago to open to corporates on demand of the banks. They were eager to leverage the standard for their corporates, and also in order to improve their client experience. So I think it was beneficial for both parties. So I'd say that the main differentiator of this solution, the KYC registry, is the standard and the private data, which is part of it. And not to forget that every data point has to be evidenced by an official document as well. So that's what I could share with you in terms of solutions, Craig.
Yeah, that's good. So the standard, the public and private data, the trust factor was was interesting. You also mentioned a platform. An aspect of the platform had to do with security. Is there anything on security that's useful to know?
Yeah, indeed. So you remember I mentioned the private data, which usually sits at the institution itself. So only the corporate will sit on that data. And the moment you upload it on a central platform, you want to make sure that this platform is super secured, because you don't want the identity or the passport of your key controllers to be leaked, or to leave the platform where you are uploading it. And as you know, SWIFT has been for 40 years in the place with this secured platform or network to exchange the payments between banks. So it is in our DNA in a way, since we've been created to super secure the data which is transiting through our systems. And so the same security level as we apply to payments is applied also to the KYC registry data, which institutions are uploading there. So yeah, this is probably something that our corporates appreciate pretty much. And actually, since we have opened to corporates, that's, to your point, one of the first questions they ask us: how is the data secured and kept safe in the KYC registry? So far so good. We've been explaining how we keep this information safe, and they seem pretty satisfied with it.
As we think about this registry, and I guess 5 years of banks, having that type of service, and now it's open to corporates. Maybe you could talk about what Swift is doing, or what the bank members of Swift or owners of Swift are doing to make this KYC compliance issue get easier, to get more people on the network. You talked about the banks wanted to expand this. That makes sense, right? The power of a network is, are there standards? Is, what's the size of the network? What can you do on the network? And so this has made a significant increase in value to the Swift network. So yeah, how is this rolling out to corporates, and what's happening here?
So yeah, we have started with banks, as you just mentioned. In 4 to 5 years' time, we've had more than 6,500 institutions joining the platform, which is quite significant in such a short time. And it's all Swift connected entities, so the Swift network is definitely leveraged. Actually, those 6,000 plus banks represent 80% of the payment transactions transiting through Swift. So we have reached quite a majority of entities that should be part of that platform. On demand of the banks, we have expanded corporates, and currently we are still limiting to Swift connected corporates. This is a strategy from our board as well, to focus on the customers we know, the institutions we know.
We just did a webinar with one of your teammates on the new payment platform, and how some banks are able to expose some additional service functionalities like sanction filtering or pre-validation activities, et cetera, to their clients who may not be corporate clients, who may not be on Swift. So it's interesting to see how all of this just changes and evolves over time.
We're really trying to leverage this platform and to try to make the proposition as the value proposition as big as possible for all of our members.
So in terms of statistics and plans, you mentioned 6,500 institutions are joined, making up 80% of the payment traffic. And I, if I remember correctly, hopefully I'm not wrong, but I thought there was around 14 or 15,000 financial institutions on Swift. So this is a very significant percentage of total, and obviously it's many of the larger, maybe bigger and more sophisticated banks on Swift. Any other stats or adoption items that would be helpful to know?
Well, actually, it's not only the most sophisticated banks. The KYC registry cannot work if we only have institutions interested in consuming data. We also need the smaller players, or players in more remote jurisdictions or locations. So it's really a community-based product. And so we do have the bigger banks, obviously, but we also have many mid-sized / smaller banks on board. And also, we have opened the KYC registry a year and a half ago for corporates. And in that lapse time, we have 600 corporations that have registered to the KYC registry. So we're quite satisfied. However, to piggyback on what you were saying earlier and the network effect, we see many banks doing active promotion towards their own corporate clients to join the registry. So we see figures increasing more and more as banks are redirecting their corporates towards the platform. So over time, we really hope that the KYC registry will be the central platform where both corporates and banks can go to as a preferred source to exchange their KYC profile. Now, in terms of evolution, because you were asking also how we were trying to improve the platform and to expand it. We are also at the beginning of the corporate expansion, and we are observing what is working for them and what is working maybe less, or what is still an impediment for them to join. And so we are every day trying to improve the platform. And so the onboarding is not something obvious for corporates. They're maybe less familiar with SWIFT than a bank. So it requires some time and some hand-holding to bring them on board. But once they're on board, it's quite a smooth process. They benefit from a dedicated person to support them, to handhold them, and to take care of them when they have to upload their data onto the platform as well, which is, you know, at the beginning for a corporate, not always obvious, the number of data points they have to enter in the platform. But once they have understood the benefit of the standard and understood that this is information they will not have to provide in a bilateral way over time, then they play the game, and again they are assisted by someone at SWIFT who will really take them by the hand to achieve that. And also we are reviewing the baseline for corporates twice a year. So we have a user group composed of banks and corporates where they can exchange between each other and decide whether or not the standard is meeting the needs or if it needs adjustments. And so SWIFT is closely in touch with this group and implementing the changes that are needed to make the solution suitable for both parties.
Congratulations on having over 600 corporates already registered. That's interesting. So, and real good progress. I do have a question in terms of how someone interacts with it. Are they interacting with the registry? Let's say a corporation. Are they interacting with their bank account management system or TMS? Are they going through like a Swift.com web interface? Is it file-based transfers? Is it API? How do people interact with that?
Yeah, happy to give you a crash course, Craig, on the KYC registry. But indeed, it is a web portal that you will access through Swift.com. So corporates do have a Swift.com account, and once they are registered to the solution, they can log into Swift.com and they will have access to the registry without having to log in once more. And so they will access the platform and they will have the two aspects. The first aspect will be for them to upload their information. So they will find, in a way, an empty profile composed of four categories of information they have to complete. They will interact with a team at SWIFT, which is called KYC Operations, which is a team of more or less 30 people who will scan the information that the corporates have uploaded. the KYC operations at Swift will make sure that the information is complete as per the standard. And once both parties, the corporate and Swift, are happy with the quality and the completeness of the profile will be published and made available to the community. However, that doesn't mean that as of that moment, any bank or any other corporate can read the KYC profile of that specific corporation. It is user-controlled access based, meaning that as of the moment the corporate has finalized uploading its information and having a complete qualitative KYC profile, they will have to receive an access request from any counterparty, and they will be in full control of who they share their profile with. So they are free to say, okay, you want to access my profile, I will accept for you, but I will not accept for another institution. So that is the first aspect when you are sharing your information with the community. And then, of course, on the other hand, you can wear the hat of consumer, whereby you will search on the web platform for a counterparty, and you will immediately see if the information is available, if it's published, and you can request access to that profile. So you can consume the information online via the web portal. You can download the profile as a file. So you will download it as a zip file. It will include all the evidencing documents that will prove all the data points you collect. So in a way, you inherit from a report, a KYC report. And in addition, we also have an API whereby you can consume also your counterparty's data.
A fantastic explanation. It's sort of, the answer was yes. We have the portal, like whether you're using Swift CSP or turning on some of the permissionings that people are used to with the online web-based portal, and then you've added APIs and the ability to inherit or get the evidence, documentary evidence that's necessary. That was great, a great explanation. Muriel, anything else on KYC for corporates or Know Your Customer Registry that we should be thinking of as we wrap up our discussion?
Well, no, I think we are really happy with the adoption so far. We are closely talking to these corporates that are joining our platform, and we are carefully listening to what improvement we could do. So we are looking at ways to make their data contribution easier with mechanisms of, for example, pre-population. So our KYC operations people and team will, on demand of the corporate, be able to pre-populate with all the data that they can find on the publicly available domain, only basing ourselves on official sources, of course. And this does not prevent the corporate from fixing or making corrections to that data. And the final say on whether or not the information is correct is still with the corporate. But so upstream, before the KYC profile is published, we're trying really to ease that their life and that process for them. So these are the first observations we've made. And again, we are closely monitoring and looking at what is difficult for them, what is easy, and making sure that they do benefit from this platform and that their banks are consuming their profile through the platform as well, and reducing the bilateral exchanges. So we are also trying to glue the corporates community on the registry with the banks community and making sure that the platform is leveraged. As of the moment, the corporate has completed its KYC profile on the platform. So it's been a year and a half. We're learning a lot already. We are listening. So any feedback that the existing corporates on board have is welcome. We are all ears. And for all the other corporates, I really encourage them to speak to their banks and to come to us if they have any questions or if they have any interest We do have teams that are available to walk them through the solution and encourage them to onboard and to reduce these bilateral exchanges.
Very good. Muriel, thank you so much for being generous with your time and sharing this update on KYC for corporates and the SWIFT KYC registry. Really appreciate your time.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.